Is a Goosehead Insurance franchise the future king of the industry, the insurance industry? Does it make sense to jump into a Goosehead Insurance and catch this wave that's been growing over the past 19 years? We're going to go through a little bit about the history of Goosehead Insurance, how much it costs, and to see if it's worth exploring for you as a prospective franchise buyer. In 2003, a power couple started Goosehead Insurance. Real estate investor Robyn Jones, together with her husband Mark Jones, a senior partner at Bain Co, established Goosehead Insurance. They aim to continue to transform the insurance industry by providing transparency, pricing information to help clients make informed decisions. Sounds a little bit like Vetted Biz, where we really want to provide you unbiased data and be as transparent as possible so that you can make educated decisions. Goosehead Insurance franchise is an affiliate of their parent company, Goosehead Insurance, which is publicly traded on the NASDAQ. It went public in 2018, so 15 years after it was founded, with a price of $15.75. The price has gone up into the hundreds and then back down, where as of today, September 26, it's hovering around $37. Market capitalization about $1.5 billion. It trades at a pretty nice premium, so about 10 times the revenue that they made in 2021 is the price for the stock. You see that for high-tech stocks that are growing rapidly. Seems a little pricey to me based on the valuation of other franchise stocks, and it's something definitely to monitor as they're expected to open up 267 locations in 2022, where in 2021 they opened up over 400. So there's a bit of a drop in terms of the number of locations opening, and they closed about 100 locations in 2021. So opening 400, closing 100, 4-1. That's not horrible, but there are some franchise brands where they have very limited closures, but it's not a red flag per se. The total investment necessary to start a Goosehead Insurance is going to set you back $40,000 to $118,000, includes $27,000 to $65,000 that needs to be paid to the franchisor. A single franchise fee is going to vary $25,000 to $60,000. They have some states that they charge extra for their franchise fee. Now, once the operations begin, the franchisees are expected to pay a royalty fee of 20% of gross revenue, which is pretty standard for insurance franchises. And then on the renewals, they're keeping 50% of the gross revenue on approved insurance products. So top of mind, I don't recall how other insurance franchises handle renewal contracts, but that does seem pretty high, that it jumps from 20% to 50% for the franchisor. There are about 1,000 franchises open. They presented financials on 744 of them. Average after a year of operations, 62,000 revenue. 2 years, 116,000, and then 3+ years, 234,000. If you're making a 40% profit margin, you run a really tight operation. Insurance is a very high profit margin business. You can expect to earn $80,000 to $100,000, recoup your capital in 2 to 3 years. The good thing is a resale price for a single Goosehead Insurance franchise is 4 times the estimate in the profits, the estimated profits in this case. So what you maybe invested $80,000 for, after 3 years, you could probably turn around and sell it for $300K, $400K. That's the standard, I should say, for an insurance business. But if the franchisor is taking 50% of your revenue on the renewals, because that's what people pay for, oftentimes that renewal, that nice book of clients that keep renewing their insurance contracts, it could be less for Goosehead. I would definitely talk to some of the Goosehead franchises that have transferred to other owners to see what they were able to sell it for. But industry average is about 4 times the profits for an insurance business. So again, the market cap's about $1.5 million for the parent company, the franchise brand. They have good amount of cash on hand. That's not a concern. I just think it's a little pricey. Roughly 10 times revenue they made in 2021. Similar multiple that many technology stocks get. EBITDA is 8.6 million, net income's 8.3 million. I can't do the math, but hundreds of times the valuation of the EBITDA. So it's definitely an expensive stock to get into. Now, to be a franchisee of the brand compared to H&R Block and a bunch of the other insurance franchises, it is very appealing. However, if you speak Spanish and you're interested in catering to the Latino market, there are some other franchise concepts that have pretty similar financials, if not better, and they're hyper-focused on the Latino community, of which Some Latinos in the United States are undocumented and prefer not to do insurance purchases online, and they want to do everything in person, whether it's a tax return with a tax advisor or buying insurance from an insurance agent. So there's a bit of a competitive moat with some of Goosehead Insurance competitors, as the final purchaser is less likely to go online to buy insurance. And that's a concern I would have as a Goosehead franchisee, where a lot of H&R Block customers were lost to online sales of tax returns for H&R Block. And I'm sure there's other parallels in the insurance space that we'll have to study further at Vetted Biz. But I would see how Goosehead Insurance handles that in terms of, they get a lead online, does it go funnel back to the franchisee in that local area, that zip code of where that person's based and where the franchisee is able to best provide coverage. Questions asked the franchise brand if you're looking to explore a Goosehead Insurance franchise, as well as with franchisees. Overall, solid brand. If you're looking to get in the insurance business and you have good sales acumen, you definitely want to take a look at Goosehead, but be sure to talk to some existing franchisees, and better yet, some of those franchisees that sold the business, and look again into that 50% of royalties that they get on the renewals, because I think it sounds a little high to me.